Good afternoon, Sir Michael and friends. Today, me, Patricia, Cindy, and Caitlin would like to present our presentation about how different capital reserves and revenue reserves are created and utilized. Before we continue this material, I would like to tell you about the general information about capital reserve and revenue reserve. A capital reserve is created to finance long-term project for a business. A revenue reserve is created to meet unforeseen events in the business organization. The word itself, reserve, can be known as retained earnings, which means any profit that is not distributed to the shareholder as dividends are kept in that account. We can define reserve as an appropriation of profit and the part of the capital of the company. We need to affirm that reserves are not cash and cash equivalents, but our profit is retained in the business. All reserves are not sources of cash, so all amounts are represented by the asset. They are not liquid enough to be used for the payment of dividend, so reserves are divided into revenue reserves and capital reserve. Both of the reserves below have different transactions that can be only used for specific purposes.
Revenue reserve. What is revenue reserve? Revenue reserve is an appropriation of distributed profit, which belong to the ordinary shareholders. This is a little additional information on revenue reserve. Revenue reserve is created from the undistributed profit called the retained earnings in the statement of financial position. What is retained earnings? Retained earnings are the profit that has been earned from the normal operating activities that belong to the shareholders and is distributed to the shareholders in the form of dividends. But these reserves sometimes remain undistributed for certain purposes. Next. Revenue reserve. Revenue reserve are divided into three parts, which is capital replacement reserve, foreign exchange reserve, and general reserve. Capital replacement reserve are created because the future of the company may need to allocate funds for replacement of the non-current assets. And this is created by transferring amounts from the retained earnings to the reserve. This uses the accounting concept prudence because it is used to highlight that the users are aware of the financial statements before purchasing or doing a transaction in the company. After that is foreign exchange reserve. Companies that trade internationally will need to buy and sell inventories with different currencies depending on each of the different countries. So in here, setting aside retained profits into foreign exchange reserve. This to be safe in case of any changes in the economy or the instability of the currency. And this is why it is needed in the international trade for the international economy. Okay, lastly is the general reserve. This reserve highlights that the company has retained profits and it might need for future expenses. After, then is distributed to the shareholders in form of dividends.
Okay, next is the capital reserve. A capital reserve refers to a specific fund or amount set aside for unpredictable expenses or long-term investment projects of a company. A capital reserve is not useful when a company needs to pay dividends. They are permanently separated from other accounts, usually through investment. There are accounts on a company's balance sheet that are marked for other specific purposes, such as long-term projects or offset of capital losses. Capital reserves do not play any role when measuring the overall wellness of any business. They do not indicate the trading or operational technique employed by an organization. Capital reserve arise through the non-trading activities of a company. They are not an appropriation of trading profits, so they cannot be used to pay cash dividends. They are created to protect the trade payables. Capital reserve has three types. The first one is the share premium reserve. It is when ordinary shares are sold at more than the nominal value of the share. Share premium reserve will appear at the statement of changes in equity and also at the statement of financial position as the equity. They also will appear in the debit entry as an additional cash received and then credited to share premium account. Share premium reserve cannot be used to pay dividends, but they can be used as bonus share for existing shareholders to write off preliminary expenses or share issue expenses. The second one is the revaluation reserve. They also will appear at the statement of changes in equity and also in statement of financial position as asset increase and equity also increase. The profit cannot be distributed to shareholders, and the reserve is maintained until the gain is realized, and the revaluation reserve will be transferred to retained earnings. The third one is the capital redemption reserve, which is created when a company buys back its own shares without issuing new shares to fund the redemption. The retained earnings will be reduced, but the capital redemption reserve will be credited. Capital redemption reserve can be used for the issue of bonus shares, and they also helps maintain the sufficient working capital, and they also act as a creditor's buffer. The next, we're going to talk about the revenue reserves table. The first one is the retained earnings, which is come from the trading profits built up from previous years and current year. It can be used to pay dividends to ordinary shareholders, to grow the company, and to issue the bonus share if the balancing in capital reserve is insufficient. The next is about the general, the capital replacement, and foreign exchange, which all comes from transferred from retained earnings. They are all also can be used to issue bonus shares and to transfer back to retained earnings. But the general also can be used to for any usage the company needs to provide. The capital replacement also can be used to replace non-current assets, while the foreign exchange can be used to cover the loss because of the fluctuations in the exchange rates of foreign currencies.
Okay, lastly, we're going to go to the capital reserve table. So there are three types. The first one is share premium, and it has a creation of issue of ordinary share above their nominal value. So the uses is to pay off the equity expenses, which include the underwriter fees. Yet this account can be used in the issuance of bonus share and for costs or expenses related to this issuance and used to write off the preliminary expenses. Share premium use also is to allow a private company to utilize the share premium account and transfer this reserve to the profit and loss reserve. The second type is revaluation, which the creation is to upward the revaluation of non-current asset. The uses is when a company creates a line item on its balance sheet for a purpose of maintaining for a reserve account is tied to the certain asset. The line item can be used when the revaluation assessment finds the net book of value of the asset is changed. The revaluation method is also will be appear in the statement of changes in equity. And lastly, revaluation will be affect equity unless they reverse their revaluation losses on the same asset that were previously in the income statement. So what do you do if there's a revaluation reserve when the asset is sold? So the asset must be continued to be depreciated as the following revaluation. So the asset has been revalued and the depreciable amount has changed. In simple terms, the revalued amount should be depreciated over the asset remaining useful life. The last type of capital reserve table is capital redemption, which has a creation to buying back of shares that is not financed by the sale or more shares. The uses is to maintain the company in the capital base intact in the event of the capital diminution, which means a depletion in the paid-up capital of a company. It can be caused when a company redeems preference capital. And Capital redemption reserve can be used to pay unissued in shares of the company to be issued as fully paid bonus share to the members of the company.
Thank you for listening to our presentations.